Hello and welcome to a new episode of the Success Great podcast with your host Hussein Talib. My guest today, Brad Shepard. He earned his undergraduate degree in finance with an eye toward commercial real estate, interning with one of the premier commercial property portfolio companies in the Northwest. He purchased his first rental property within months of graduating college. Brad, welcome to the grid. How are you?
I'm doing fantastic. Thank you so much for having me on the show.
Awesome to have you here. So, from what I get from this little intro about you, that you started early in real estate in your age. So tell us a little bit more about yourself and how did you go through this journey and how did you start in real estate?
Yeah, so I've been involved in real estate in one aspect or another for the last 20 years. It's kind of hard to believe that it's been that long, but I don't know where it was. Somewhere in my teenage years, I got the idea that real estate is where I wanted to go. And that's, maybe some article I read told me about how, so many, whatever percentage of millionaires have, made their way there from real estate or what. I don't know where I got the idea, but that's definitely what I went into school thinking the path I wanted to go down. So I, got in a finance program, did an internship with a large commercial real estate firm up in Seattle, and loved it. I didn't go right into the commercial space coming out of college like I had originally intended. I got, kind of life took me a different path, but I've done rentals and even hotel rehabs, hotel construction.
Cool.
Raising money from both domestic and international investors. And for the last 4 years, I've been exclusively focused on the capital raising side for large commercial deals like apartment complexes and self storage units. And yeah, it's I enjoy it. That's one of the cool things about real estate is there's so many different aspects and avenues that you can take depending on what your skill set or interests are.
Cool, awesome. Well, it's great that you kind of discovered where you wanna go into this side of things early in your life. Whether, like you mentioned, maybe you read some kind of an article in a magazine or read some kind of online
Right.
post, or you met someone that was in real estate. So reading is good. This is one point.
Yes, it is
Yeah.
nice when it's when you can discover an interest early. That can be helpful.
Yeah. So now you mentioned commercial real estate and hotels and this kind of. So, what my major things or things that you are focused in right now in real estate exactly?
Yeah. So, after doing, 4 or 5 years focused on residential properties, and that's the smaller one, a single family house or a 2, 3, or 4 unit deal. Um, I got tired of dealing with how much work those take and
Mm,
kind of the lack of professionalism. I'm a contractor says I'll show up on Tuesday and he doesn't show up, right? Or you agree on a price and then that price gets adjusted significantly, so surprisingly. Or working with the sellers are just your typical homeowner who's selling a house, and that might be the first or second or third time that they've ever sold a property. And I just kind of got tired of that aspect of it. And
mm,
so 4 years ago is when it kind of dawned on me again, like, hey, let's go back to the commercial space. And that's where I've been for the last 4 years, coming up on 5 years. And I like it because it's of the sophistication. You're working with professional sellers, professional property management, full-time staff as far as the on-site property maintenance goes. So it's just a different level, and it makes it much easier to manage. It's bigger
mm.
numbers, but it's quite quite simple compared to the active management of the single family properties.
Cool. So is the same as what's called real estate syndication?
Yes, exactly. That's exactly where I'm at. And so the syndication, that's just a fancy word for group investments.
Mm,
With a smaller property, and just generally it's just one person that can afford to buy those. When it comes to these multi-million dollar apartment complexes or self-storage units, that generally takes a group of people. A syndicate is just all that means is just a group of people coming together to pool their money to be able to afford to buy it, fix it up, and sell it. It's the same idea as a
mm.
fix and flip, but it's just doing it with bigger properties.
Cool, yeah, because they know what they're doing, and like you mentioned, because it's a big complex or a big place, so it needs maybe more money, maybe someone one on himself can take the risk on it, maybe. Although,
Right.
is there any risk in real estate right now, do you think, or it's like risk-free business?
Well, I would never say risk free, but I do like real estate compared because of so much of the safety nets that it provides compared to other investment opportunities. It's hard to start a business. Yes, a stock can go to zero. Real estate, you've got a physical insured asset. I mean, you can drive over to it. You can put your hands on it, right? You can feel it. And it's, real estate in the end of the day is pretty simple. You build a building, somebody wants to live there or store their stuff there, and they pay you money for it. And if you fix it up nicely, they'll pay you more
Yeah,
to live in it or to store their stuff
exactly.
there. And then once it's worth more, then you can sell it for more than you paid for it. And so
Mm,
it's a really simple concept.
mm,
Um, so to me, the risks are much less. What are much fewer. Where there are risks, of course, is if how the operator is evaluating a market, evaluating how much it's going to cost to turn this property around, evaluating how much they can increase the rents once you do improve the property. And so it comes down to the operator, really. That's where, the first thing that we evaluate is, does this operator have a track record of success? Do they know what they're doing? And
mm.
so, it's because you are trusting an operator to go in there and execute the business plan. You just want to make sure that this is a team that knows what they can do what they say they want to do.
Cool. Also, because for example, I studied accounting. So what you learn in accounting, like land, for example, land itself, land has a consistent value. It does not depreciate, right? So yeah, but does the real estate or buildings or these kind of things, like you mentioned, if you improve on it, if someone does not improve on it, will they depreciate in value?
Yeah, sure. These are assets that do depreciate, right? I mean, if you don't maintain the property, it becomes out of date, becomes dilapidated. Um, the lots of things can go wrong. Property, real estate needs to be lived in, assuming
Mm,
there's a building there, right? I mean, land's
mm,
a different thing, but if it's a house needs to be lived in to be upkept.
mm,
Yes, I mean, we haven't had a big downturn in the real estate world for coming up on 13 14 years. 2007, 8, 9, of course, those were rough years. Some unusual circumstances there are market risks, legislative, interest rate, etc., and oversupply. But right now we are so undersupplied, and there's so much activity, people wanting to move, people changing markets, working remotely, and there's just not enough supply. Anywhere you look,
yeah,
there's not enough supply. And so when you have this high demand and low supply, prices go up.
yeah.
And it's hard. Sometimes people ask, are we in a bubble right now?
Mm,
And it's not. What's different now is there's not a whole lot of speculation going on. It's true demand and low supply. And so, for me, again, yes, real estate can go down, but it can't happen until we catch up on the supply side.
yeah, but what happened back in 2008? It was I watched a movie called The Big Short. I'm sure you know it.
All right. Yes.
That was tough. So
Great
some
movie. It
people,
makes
yeah.
you walk away from that so mad at all the people who pulled all those tricks and got away with it for sure.
Yeah. Yeah. So like you mentioned stocks and there is real estate. So do you, because you are in real estate, do you think people who are successful, for example, in other arenas, in other areas, should go also in real estate, or they should stick into what they do best? For example, if they good stocks, or if they are good in whatever they are, sales or whatever, which is
It's
actually which is real estate actually involves sales basically, right? I think.
right. For me, the answer is to yes to both of those questions. So, I am clearly biased. I am a big fan of real estate more so than stocks. That said, it doesn't have to be an either or. I do have a stock portfolio. I encourage people to invest in things they're comfortable with. I am definitely overweighted in real estate. I like tangible physical assets. I have had stocks that go to zero. I mean, I remember in the early 2000s, I had a small piece of Delta stocks, and Delta Airlines, and Delta filed for bankruptcy, and
Oh.
those stocks went to zero, right? So I mean, it's not just theoretical; it can happen. And with real estate, you can't go to zero. There's just, I mean, it would take something worse than World War III. I don't know what it would take to get real estate to go to zero.
Mm,
So it's, I like that aspect of real estate. But that said, I do encourage people to invest in things they're comfortable with. I want them to get comfortable with the idea of these syndications and stick to the things that they're good at. And so, I spend my day working with potential investors, educating them about these syndications. And these are individuals who they're already successful at whatever they do, doctors, business owners. They've done well in their chosen endeavor. And I'm saying, hey, how valuable real estate is, how the solid returns that are available here, but you don't want to be a landlord, right? You don't want to be a fix
mm,
and flipper because that's another day job. Those are
mm,
tough. And even with a good property manager, that can suck up a lot of brain power. So rather than being an active real estate investor, you can become a passive investor, participate in these commercial deals with us, these syndications, get all these advantages, the returns, the tax advantages, etc., and just keep on doing what you're doing that you're already successful at. And so
mm.
that's really who I work with, is people who are already successful doing other things, but want to take advantage of the returns and tax advantages of real estate as well.
Oh yeah. So like you mentioned, it's taxes. You mentioned taxes, and does real estate have more a better effect on people who invest in it than, for example, stocks?
Yeah. So, talking specifically about the U.S. tax code, because that's where I'm familiar. One thing, the leverage opportunity in real estate is fantastic. Generally, you can buy a piece of property for just 20% down. Yes, I know you can
Mm,
buy stocks on margin. That's a whole different risk profile. But just the standard purchase in real estate is you only have to come up with 20 or 25% of the sales price,
mm,
and then the rest of it you can leverage. But the tax code in the United States is really favorable to real estate investing. The tax code is all about providing incentives or disincentives. For whatever reason, Congress has decided that they really want people to invest in real estate because they make it really tax favorable. And so what you can do in the real estate, we talk about depreciation. The tax code says, hey, this is an asset that is going to wear down over time. So every year you can take a portion of the value and consider a loss on your tax return and deduct your income. And so it actually can reduce your the income for which you have to report to the tax authorities to pay taxes on. And and then in these large commercial deals, there are opportunities to bring, rather than doing that over, a portion of the building over, I'm going to use a rough number. It's not the exact number, but it's roughly 30 years, just shy of 30 years.
mm,
Instead of taking 1/30th of a deduction every year, we can do it much quicker than that. And so we generate some big passive losses, even though we're getting money into our bank account each month. And you take those losses, offset your other gains to reduce your tax exposure. And
mm,
those pass through to all of the investors that are involved in these deals with
mm,
us. And so, so there are some big tax advantages that you can
mm.
get with the real estate, as opposed to investing in stocks, or even the REITs is another vehicle that sometimes people will use.
Cool. So, like you mentioned, who wants to start investing in real estate needs maybe 20 to 25% uh, value of his money to start with that. So it does not have to be like complete price. So if there is a complex or a building or whatever that's priced at $1 million, for example, you need like $250,000 to do that. So, and speaking of these
Right.
kind of prices, what are the things that the price range, let's say, that you work with, or do you go all around all the commercial real estates, work with that?
Yeah. So as far as price ranges go, generally we're buying properties that have at least 150 units and above. I think the largest we bought was just over 400 units. And so let's say, for example, if the property costs $100 million, that's pretty common. 80 million, 60 million is that kind of a range. And the bank, the lender, is willing to cover 80%, more often than
Mm,
not, 80% or sometimes 75% of that purchase price. So that means if it's a $100 million property, we've got to come up with 200. If it's a $100 million property, we've got to come up with 20 million, right? And so how do we do that? So that, and this is another advantage of the commercial space. If you're going to go buy your own home and it's $100,000 property, you have to come up with $20,000 down payment. The bank wants you, the individual buyer, to have that 20,000 in your bank account for months and months and months and months already. That's your money. They want that to come from you and you only for the down payment. On the commercial space, those lenders, they don't care where you come up with the down payment. So everybody just piles in their money into a pot to come up with that down payment. And the bank's like, cool, you got the down payment, let's do it. So, that's what we're raising. We're raising the down payment. That $20 million is what we're raising to be able to purchase that asset. So the investors have put in their 20% combined, and then the bank puts in their 80%. We're going to raise more than 20 million because we also need to come up with the money to do the updating. So there's the capital that we need to do to fix things, to make it nice, up to date, put in some nice new amenities, fix the clubhouse, put in a better gym, fix the pool, what have you. So we raise more than just a down payment, but it's that same concept.
Yeah. So like you mentioned, you can bring money from whatever in these kind of commercial states. So can people who are in retirement, can they use some of their money to invest in real estate?
Yeah, absolutely. And so one thing to consider is the types of deals that we work on. These syndications, they are generally projected to be about a 5-year project, so a 5-year hold time. And so if somebody is advanced in age, upper retirement age, these probably aren't suitable investments. They are generating cash flow. And so if maybe somebody who's just near retirement or just recently retired, they could take advantage of the cash flow that these generate as part of their fixed income that they live off of. So the answer is yes. And also we can use retirement accounts to invest in these. But that's something to consider, is that these are not, unlike a stock where you can sell it with a couple clicks of your mouse, right? These are longer holds that are tougher to sell. If you came up against had an issue, you really needed your money back, we'd have to involve a few people, have to involve the operator, try to find somebody to take your place and determine the current value and make that transaction happen. So it's quite a bit trickier to do so. So that's something to consider. There are pros and cons, but it just depends on that individual scenario.
Cool. So how would your company help people that want to go into investing? How do you deal with them? What do you do for them? How do you advise them to go around these kind of things?
Yeah. So one thing we realized is most people who have done well in other places, they want to get involved in real estate. They're not familiar with these commercial syndications, and they're not fancy. They're not made up. They're not, there's nothing shady going on here, but they're just not very well known. Lots of people do them, but again, they're just not as well known as mutual funds or stock market investing or REITs. And so my job is to work with these potential investors to educate them about these opportunities, and then bring them the deals that they could potentially invest in. Because then, once you find out that these things exist, then the question is, who are the operators that do a good job, that actually know what they're doing? Because there's lots of them out there, but you may not want to put your money on some specific groups. And so our job then is to and what we do, right now we partner with 6 different operators. And again, the operator are the ones who have found the deal. They are the ones who are going to execute the business plan. They run the show. I've partnered with those operators. The deals that they have, we vet each deal independently. And then the ones that we approve, we present to our investor pool for them to be able to participate in alongside with us and those operators. So that's our goal, is to, 1, educate people about these opportunities, and 2, provide them with pre-vetted, hassle-free opportunities for them to jump in on.
Cool. So have you worked with let's say international investors outside of the US, or only have you worked with only inside the US?
So the answer is yes, but they've all been American citizens. And so yeah, so I'll add that caveat in there. I've worked with individuals who live overseas, expats, but they're American citizens, and so the rules are pretty similar. I haven't worked with foreign citizens.
Cool, awesome. So
though I would love to.
Cool. So, but what's your goal with your company now? And like you mentioned, goals of the investors. What's your personal goal revolving around the company and real estate?
Yeah, so honestly, it's we're really happy with where things are at. It's um, the business that I can do from anywhere. I love working with new investors and showing them these opportunities. For me, I think going forward, I want to add on some different asset classes. Right now, we've been doing apartments primarily, mobile home parks, and self storage units. There could be some different asset classes around land or new development. So I'd like to work with some operators in those spaces as well. Um, and just to make sure we have something for every investor's uh, goals and their profiles.
Mm.
By and large, the deals that we do have roughly a 14, 15, up to 17% projected return. We do try to exceed that, but that's generally the range. So we could say like a 15% return. That's the goals that we have for our investors. And I just I'm out there right now just looking to work with more individuals who are interested in these types of opportunities.
Cool, awesome. So you mentioned to me earlier of air like you moved right from one city to another.
Right.
So how do you choose the place or the city or the market that you go into?
Yeah, that's another great thing about these commercial deals. We're buying, honestly, we're buying a stream of cash flows. We're buying a business. And so you don't have to live in the same area that you invest. So we just moved from Texas to Idaho. Um, and we're not going to skip a beat. You notice I've got some blank walls. And, I don't have anything hanging up right now because we bought a house that we're going to start tearing apart to do some remodeling on. But our investments that we participate in, I can do that from anywhere. So we like to buy properties in the southern United States. Those are areas that generally have more favorable legal systems for landlords, and their economies are just solid. So Arizona, Texas, Florida, Georgia, North Carolina, South Carolina, these are states that we call landlord friendly, and they're just have roaring economies. Lots of people want to move there. We want to invest. We're providing housing, so we want to invest where people want to live. Right? That's our market. And again, we can do that from anywhere. So yes, I'll go out there as part of our vetting process. I fly out to most of the properties that our operators are purchasing, and walk through it, take a lot of pictures so I can share those with our investors. But at the end of the day, I don't have to live there. I wanted to live up where we're at now in Idaho. I wanted to live near the mountains,
Cool.
get some
Nice,
drier air, get away from the
nice view.
exactly nicer view, fewer bugs. Texas has a lot of bugs, so we were done with it. Wanted to more opportunities to do some skiing and camping up here, but so you can invest in anywhere because it's the operator who's going to execute the business plan.
Cool, awesome. So, speaking of this, do you have been all things or all stories or all your businesses revolving real estate good ones, or do you have some not so good ones?
I do have some not so good ones.
Okay.
Yeah, I think anybody involved in real estate for just a handful of years is going to have some scars. So, both on the active side where I've done my own deals, um, I've done some fix and flips where, the intent was to be in them for just a few months, buy it, fix it up, sell it. And some of those have done really well. And I've had two that went really poorly. One, we got into some, once we bought it, started doing some work, we realized the previous owner had done a lot of structural changes that made the house really unsafe, to be honest.
Mm.
And so it just delayed everything. I had to bring in an engineer, an architect, and the city code and all of that. And so what was supposed to be a 6-week project turned into almost a year and a half.
Ooh.
And then I did a project also out of state. So living in Texas, I bought a house in Pennsylvania, and I was just so enamored by the numbers on paper, what this thing could do, what after how much it would cost to fix it up, how much I could rent it for. I thought, boy, I'm going to buy 100 of these things. Well, the first one, it should have just been torn down. It was not worth putting money in to fix it up. And I didn't have, a good contractor with good numbers. And it was nightmare scenario. And went through a whole winter in Pennsylvania where it snows and freezes quite a bit, and just took a lot of work. flying out there several times to try to get that thing done, just to a point that I could sell it off to another investor. We lost a bunch of money on that one.
Yeah.
So yeah, so those are on the fix and flip side. Actually, my very first deal in the commercial space, where I went in as a passive investor, meaning I just wanted to go in there and see how this worked. I wanted to get to know this world a little bit, so I just put money in on a deal in South Texas. It was supposed to be locked up for 18 months, and it's 4 years later, and we still don't have our money back. So that project, lots of things went wrong there. It got hit by a hurricane.
Oh.
Poorly managed, 3 different property managers there. It was just a different style that of a business plan that I've learned that we're not going to do again. But I learned a ton of lessons from that one as well.
Yeah, this is how you learn. Sometimes from failure. Failure is something you learn from. It's feedback.
Absolutely, absolutely.
Yeah, yeah, yeah. So I don't know what is it with contractors. Sometimes they don't do their job on time. I don't know. What is it?
Yes.
Yeah.
Yeah, especially when you're talking about small properties and you're just kind of, anybody can call themselves a contractor and you don't know. I made a lot of poor judgment calls on that one in Pennsylvania for sure. Lots of lessons learned there. But that's again, when you get into these bigger properties, you're working with construction firms. It's a little, expectations can
Mm.
be quite a bit higher.
Yeah, construction firms and well-known architectural designers and companies, they need to know or keep their reputation. Let's say it's not like
Absolutely.
anything goes around. So, what would you
Right.
say? One takeaway from this episode, Brad?
Yeah. So what we learned on that commercial deal that we're still in, this just become, keeps on going and going. That one was a deep turnaround project. It needed a lot of work to bring it up to current markets. And part of that project was to build some new apartment buildings on that property. It had the space to do so. Those are the portions of the project that really got us in trouble. There was some bad zoning. Again, we were halfway through the construction when the hurricane came, knocked, set us back to square one because it knocked a lot of stuff down there. Um, so, um, the takeaway for us has been we don't like those deep turnaround projects. And another thing I'll mention is the market, the neighborhood that property is in is, it's an hour and a half south of a big city. It's an hour and a half south of Houston, Texas. And we like properties that are closer into the population centers.
Mm.
So, again, the takeaways being, I don't want these big turnaround projects like that. I want them to be a little more a lighter. These are already well performing assets. We just want to go in there and optimize them, just tweak it to
Mm.
bring them
And you make it short term, like a month, 2 months, maybe. It's not like that one that took like a year or a year and a half. That's
exactly. It shouldn't.
yeah,
These are deals that should, you should be able to turn around pretty quickly.
yeah, yeah.
That's what
Cool.
we like.
Awesome. So, where can people get in touch with you, Brad?
Yeah, the best place to connect with us is at our website, sugarhouseinvestments.com. And that's where you can connect with us, put your email in our investor database there and see the opportunities that we have available. And then I also like to hang out on Twitter too. There's a lot of great real estate discussions going on Twitter. So
Mm.
I check in on there several times a day as well.
Oh, cool. Awesome. Well, thank you, Brad, for being here today with me on this episode of the Success Grid podcast.
Absolutely. Thank you again for having me. I appreciate it.
Awesome. Awesome. Awesome.